You know what caught my eye this weekend? A single analyst note that sent one stock up 11% in a single session, while everything else was just kind of meh. That stock? Applied Materials, ticker AMAT. And here's what makes it worth telling you about. Monday, AMAT opened at 635. By the close, it was at 694, up almost 11%, 10.82% to be exact, on nearly 15 million shares. That's more than double its normal volume. So what happened? KeyBank analyst Steve Barger came out with a note, maintained his buy rating, and raised the price target from $550 to $750. That's a 36% upside call from where the stock sat Friday. The market heard that, and it didn't hesitate. If you're new here, subscribe. Every video is a deep dive into one story. Watch list in the pinned comment. Here's the chart. Daily time frame first. Look at this move. From 360 back in March, that's the low right here, all the way up to 694 now. That's basically a double in 3 months. All three trend lines are far below price. Long-term at 275, mid-term at 360, short-term around 550. This thing has been running like it stole something. Hourly tells an even wilder story. Long-term trend around 510, mid-term at 613, short-term at 665. Price at 694 is above every single line, including the upper rail, which it blew through days ago. That red-dotted lower rail down at 416 might as well be on another continent. So here's the question. Do you chase an 11% day, or do you wait? My answer, you wait. Entry zone on any pullback to 670 through 685. That's back toward the short-term hourly trend. Stop below the mid-trend at 610. First target 720. Retest the recent high zone. Second target 750 if momentum resumes, which happens to be exactly where that analyst set his target. Risk reward about 1 to 2.2 on the first target. Clean. But AMAT wasn't the only name moving Monday. There was another one, Amazon. Ticker AMZN. Closed up 3.2% at 240 on 77 million shares. Also heavy volume. Why? Two things. Barclays analyst Christine Cho raised her target from $849 to $1,250. And separately, word got out that Amazon will start paying Anthropic based on token usage instead of compute hours, starting next year. Translation: Amazon is going deeper into the AI infrastructure bet, and they're willing to pay for it. The daily chart tells a different story than AMAT, though. Price at 240 is actually below the midterm trend at 252, short-term at 235, long-term at 238. So Amazon hasn't broken out. It's still recovering from a pullback. The upper rail sits up at 272. That's old territory. Hourly frame shows short trend at 238, mid at 246, long-term at 251. Current price of 240 is sitting right near the short-term support. Upper rail at 264, declining. Setup here, entry on any dip to 235 through 238. That's the short-term confluence zone on both time frames. Stop below the daily lower rail area around 225. First target 252. Reclaim the daily midterm trend. Second target 270. Test the old resistance zone. Risk reward roughly 1 to 2.3. Here's the thread that connects both names. Analyst upgrades drove the Monday action, but the setups are completely different. AMAT is a breakout chase. Buy the pullback in a rocket ship. Amazon is a recovery play. Buy the retest of broken support turned resistance. Both work, but you need to know which one you're trading. Subscribe if this helped. Watch list link in the description. See you next time.